Snap elections, budget battles and a Trump re-election. Political uncertainty plagues the Eurozone. Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Peter Devlin. The EU's sputtering Franco-German economic motor has stalled after hitting gridlock in Paris and coalition collapse in Berlin. But there's no time to lose for the Eurozone as the bloc faces growing economic threats. The re-election of Donald Trump, who once described the EU as one of America's biggest foes, adds to the recipe of risks. So, will Europe rise to Trump's economic challenges, or is more pain to come? Well, to help answer that and more, I'm joined by Sabrina Khanniche, Senior Economist at Pictet Asset Management. Welcome, Sabrina. Thank you very much for joining us. So let's start with Germany. And one of the reasons for the collapse was disagreements on whether to suspend its debt brake. So markets are starting to bet that fiscal policy could loosen after the election. So overall, is this a silver lining for Europe's biggest economy?
So I think that those elections finally could be a welcome development in Germany, because this is going to lift some political uncertainty and therefore having more visibility. So depending on the outcome of election, but overall, if we look at the polls, they tend to suggest that a coalition of the CDU and CSU with a junior partner, either the SPD or the Greens, could focus on pro-growth reforms, meaning more investments, so which is supporting both the supply side and the demand side of the economy, and potentially creating some fiscal space, which is needed to revive the industrial sector in Germany.
Overall, is the pessimism on the outlook too entrenched for investors to shake off?
Now, if we focus at the recent data, they have shown some signs of stabilization, which is a welcome development. So if we look, let's say, at the IFO and the PMI, we have early signs of improvement on the manufacturing sector, driven by activity components, so which is demand as well as activity. So obviously, we know that some measures have been announced by China, so it could be supportive for Germany, for the Eurozone as a whole. It could be positive for the second half of 2025, but there is early sign. I also have to mention, so this is demand for abroad. Demand for capex also could rebound if there is indeed less uncertainty going into 2025. And it could be also supported by easing monetary condition, with the ECB continuing its monetary policy easing. Another factor could be demand for consumers. Saving ratio remains pretty high in Germany because of uncertainty. And on this front, real disposable income could be supportive for private consumption going forward, as shown in the Q3 GDP, which has surprised on the upside. The 0.2% increase was mostly driven by domestic demand and notably private consumption.
So let's take a closer look as well at the potential impact of US tariffs. Many reckon that they would really hurt the economy. Goldman Sachs has warned that even a 10% tariff would knock 1% off European growth. So is this really an economic nightmare for the bloc?
So obviously tariffs is not a great news. This is going to potentially have an impact on growth for Germany, given the openness, but also for the Eurozone. If you look at US exports, it accounts for 4%, mostly 4% of Eurozone GDP, slightly less than 4% for German GDP. So it is potentially, this is potentially a bad news for the Eurozone. There is no visibility for the time being. So the numbers that have been announced, so currently we have 2.5% tariff, so it could increase to 10%, 20%. But assuming that we have finally half increase, let's say 5%, in that case, the impact would be more contained. But again, trade escalation is indeed no good news for the Eurozone economy.
So overall, investors have been bracing for further economic pain that's been at the expense of the euro. Do you expect more weakness for the euro to come in the future, especially with the drop to parity versus the dollar becoming more spoken about?
If we look at the monetary policy divergence, depending on what is going to be implemented in China, and if indeed we have weaker growth, much weaker growth going forward with trade tensions, escalation, is going to be bad for growth. And in that case, we would see the euro depreciating further. Now, if we look now at our fundamentals, they tend to suggest a dollar depreciation and a euro appreciation just based on the current account balance, relative prices and relative productivities. But that is indeed a risk.
Sabrina Khanniche of Pictet Asset Management. Many thanks for your thoughts. And that's Macro Matters. Don't forget, you can watch more videos on Reuters.com.